Rod, it's great to have you back. Good morning.
For having me.
Rod, we had you on back at 180, and we couldn't get you to move off the neutral then. Now around 140, do things look more interesting?
Well, I mean, it's from a valuation point of view, Apple's still pretty expensive. If you look at the S&P trading on 16 times, maybe 23 earnings, Apple's trading on 24, 25 times. So that's still over 50% premium. So, it's very expensive relative to the S&P. And we think for what Apple is, which is a company that, it's a great company struggling to grow. And I think that as we move out of this COVID period, you're going to find out that, what we've been talking about, that difficulty growing, the fact that the subscriber base is now pretty well maximized, growing at GDP type growth rates, and the ARPU, if anything, is probably going to trade down from here. That's not going to be great for that multiple, we don't think.
What do you tell people who think, look, there's got to be some kind of coiled spring, albeit maybe small, if in fact China loosens up? Or is that, tactically, is that a move you're just not interested in?
No, I do think China, tactically could improve from here. I mean, we see all these lockdowns, and how long can that go on? Eventually, they're going to have to unlock, and things get a little bit better there. So I think that could be a source of upside for Apple. On the other hand, though, we're all sitting around worried about the consumer in Europe, the consumer in the U.S., and if that were to weaken, then, that wouldn't be great news for Apple. I will say this earnings season, demand was pretty good. Apple did fine on demand, all the high-end demand indicators, Qualcomm as well. Sonos just reported this week, all this stuff that serves the higher-end consumers doing pretty well right here.
Rod, the fact that we did see this dramatic fall in Apple's stock price this week, what do you attribute that to? Is there anything fundamentally that has changed in recent days where the company is concerned, or is it really just a reflection of broader market dynamics that are playing out across multiple asset classes right now and investor psychology?
Yeah, one of the things that really surprised us in the COVID period is retail investor participation in Apple and a bunch of other stocks. And, people just had a lot more disposable income, and your average investor out there on the street, individual investor, went and put money into a bunch of things. We think that's a theory. You can't necessarily prove that, but it's probably the case. So what you're seeing now is those popular retail stocks beginning to reverse. And I think, you see it in other names too, Tesla, NVIDIA, et cetera, these other things, and even crypto. You guys have been talking about crypto a lot this morning. There are a lot of different asset classes the retail investor was particularly enamored of. Those asset classes are beginning to reverse now.